Is now the right time to fix? Hi, it's Marissa and Kristen here from Rise High, and today we're coming live to you because we've had an overwhelming number of questions from our clients and our community about interest rates, and specifically, people are nervous that interest rates are going up, and we do know that that is happening. And what should they do? Should they keep their loans variable? Should they look at fixed rates? What's the right answer? So we thought we'd come to you live today and answer your questions and hopefully give you some valuable information to make the right decision for you. So Kristen, what is the right thing to do? Is now the right time to fix?
That is definitely the question on everyone's lips at the moment. With everything that's going on in the media, talking about inflation, rate rises, what's going on in the economy, it's definitely the number one question in my email, my phone calls at the moment. But I guess the real answer to that question is no one really knows the perfect time to fix your rate in. The best economists, bankers, brokers, no one has a crystal ball, and no one can tell you, when the next pandemic is happening, or, when is the Russian war how is that going to impact things? So I guess the ultimate answer is there is no right answer.
Yeah.
But I think there are some things that you do need to know that will help you, I guess, find your way through this period in time.
And what would you say those things are?
I think it's really important to have a knowledge of how the fixed rate cycle actually works.
Yeah.
Generally, fixed rates do predict where the variable rate is heading.
Which we're obviously seeing at the moment because fixed rates are now becoming more expensive than the variable rates, suggesting that variable rates are on the increase, which is obviously what we're expecting.
Yeah, exactly, and probably even happening a little sooner than we thought, given what's going on in the market and what we're hearing about in the media at the moment. But it's a bit of a tough time because over the last 10 years, really we've been living in a falling interest rate market or a pretty steady interest rate market. So it is going to be a bit of a challenge and a bit of shock for some people on how to negotiate this.
Yeah, absolutely. But we do need to bring ourselves back and remember that we are in a very unusual climate with historical low interest rates. And we've all known that the interest rates at the current level was not sustainable on a long-term basis. The average interest rate in Australia is between 6 and 8%. And when we're seeing home loan rates with a 1 or a 2 in front of them, it's incredibly low. So it is going to obviously be, like you said, after 10 years of falling interest rates, now go into an environment where interest rates are going to increase, and at what pace we're not sure, but it might be relatively rapid. How do you navigate around that?
Yeah, so it is all about having some knowledge there. And I guess the ultimate answer is if you were thinking about fixing rates to outwit the market, to try and predict where things are heading, I think you've pretty much missed the boat at the moment.
So yeah, it's probably too late for that. But what would be some of the benefits, I guess, of considering a fixed rate now, even though fixed rates have actually already started to increase?
Yeah, so I personally think that you don't fix your interest rate to outwit the market, although that's nice. No one has a crystal ball and no one knows where they're heading. I think the main reason that we would encourage someone to fix, or that you would think about fixing your own loan, is for budgeting purposes.
Yep.
It then doesn't matter what's going on in the economy, what's happening overseas, what's happening with the pandemic, with elections coming up. If you fix the rate on your home loan, you will know week in, week out what your repayments will be for a specified period of time.
Yeah, and you can't underestimate the value of that, because having that stability gives you that sleep at night benefit.
Yeah.
Kind of like an insurance policy, or just
absolutely
knowing that it's going to be locked in.
And you do pay a bit of a premium for that. So what we're seeing in the current market, yes, variable rates are a bit lower, and if you were to fix your rate, you would fix it in at a higher rate. But basically you're paying that premium for security. You're paying it to reduce your risk, to allow you to budget and give you, a really easy way of managing your money.
And there are also a lot of other pros and cons and considerations when thinking about a fixed rate, which we've covered off in our previous video, which is about fixed rates versus variable rates, pros and cons. So we'll include the link to that video in this blog, but definitely check that out, because it's really important that you don't rush into a fixed rate without understanding the implications of all the pros and cons of what it all means, because you could find yourself in a bit of a hot mess if you fix your rate and then need to sell the property or want to get out of the loan for some reason during that fixed term. And what are some of the other tips that you'd give to people that are navigating this at the moment and trying to decide what the best option for them is? What would you say the next step is for them?
I think probably the smartest next step is to give your Rise High mortgage broker a call. We can talk you through those ins and outs of your specific scenario, what you're worried about, how your budgeting is going, and I guess give you a bit of an idea of what things would look like if we did fix the rate.
Yep, so you've heard it from Kristen. Come and speak to us. We'd love to help you, and we will sit down with you, understand your circumstance and work out the best strategy for you moving forward. We've also got a great video on how to prepare yourself for rising interest rates to help you get ready for this, and we really encourage you to watch that. We'll include the link to that in the blog as well. Thanks for tuning in, and we'll see you again next time. Bye.
Bye.